Hey guys, how are you all doing? So Dan from Trading with Dan here. If you guys just smash the like button, this is our Binance update for our Binance challenge, Binance MXC and 3 commerce challenge, and we will go straight over to have a look at how it's going. So if we just check the balances, MXC is up to let's get rid of this. 0.358 BTC, so we'll add that on. 1 second. 0.358 BTC, and the Binance salts definitely aren't loving life at the moment, but this is obviously in Bitcoin terms, and Bitcoin's having a bit of a spike up at the moment. But yeah, Binance at 0.7298, so plus 0.7298, that gives us a total of I don't know why this won't move. Doesn't want to move for some reason. Anyway, it gives us a total of 1.0878 Bitcoin. So that is not bad. I'm happy with that so far. Obviously that's Bitcoin working out in Bitcoin terms. But Bitcoin's had a nice move up over the last 8 days. So obviously in fiat Fed note terms, we're up quite a few more dollars. So that is good. 3 commerce has been working quite well for us, scalping the profits out for us. You can kind of see obviously how it's been working. I'll show you the indicator we're using again in a little bit, but it's basically taking the profit, taking partial profits once we hit these basically sell levels based on this indicator. So yeah, you can see these are all historical trades, completed trades 12. I've not got it on large settings, so we're only taking 25% of a position off, so it's only made us an extra $61. But bear in mind that is whilst obviously these altcoins have been going down, because our Binance account has been going down a bit. But yeah, made an extra $61, which is not bad. But you can see the trades here. I've closed most of these manually when it's just come off a bit, and either we've got the buy arrow or it's just looked like it's going to go back up again, because either way I want to have my altcoins, I want to have those bags filled. I think these coins are going to go up, so I don't mind hitting the buy button early, as in to buy the coins back. So yeah, 1.26% there, 2.3, 4.68, 1.05, 1.94, 2.61, 2.5, 2.69, 4.64, 5.88, 2.81 and 10.3. So yeah, a few good scalps there. 12 good scalps basically, getting us some extra precious coins. I feel like Super Mario collecting all those coins for when we have a pop up. So I am really pleased with this. And I mean, I am thinking increasing. I'm only taking 25% off. I'm thinking of increasing that to at least 33%, so it's taking a third of the position off rather than a quarter, because obviously that'll just increase this value more. And then what I may do, rather than have I'm having 2 extra safety orders, so 2 extra take profit levels on top of the initial take profit level. So that is basically 3 take profit levels at 25% each, which is 75% of the position off if we hit all 3, if we had like a big massive spike up. I'm thinking of just having my initial entry at 33% and then 1 second entry at 33%, and then the rest of the position will run. That's kind of what I am leaning towards. But yeah, I'll show you some of the trades anyway. So we had RLC, we had obviously a couple of sells here and then a profit there, and then I mean we got the buy there and the buy there, so obviously I put the coins back on, and then another sell here. If you have a look at Ren's worked out alright, some sells here, and then basically putting them back on there, sell there. So it is basically, if you have a look, working pretty well. This one not done that much though. Sold there, profit, sold there, and basically just was sat on that position. Carver, nice sell up there. Look, as you can see, them nice move down, and then we've got the green buy again. Nice sell up here. Got the buys again. I mean, you can buy on these buys. I will either have a profit. There's 3 ways I basically re-enter the trade. And let me just clarify this so you guys understand. I have bags of these coins already on Binance, and what I am using the bots for is to take profit on part of those bags once we have spikes up, and then we start to come back down again. That's what this indicator will do. So I will either take profit whenever I see an arrow, or I see like the price looking like it's starting to go back up again, and I'll just manually click end the trade, or I'll have a 10% profit target which you can hit, or yeah. that is the ores. Either I will see it going back up, or I'll see the arrow, the buy arrow. So I'll either see the buy arrow and buy, I will see the market shifting and I'll just want to get back in again, or it will just hit the profit target of 10%. And again, you can see a sell there and a buy there. But obviously these are the buy entries, the green entries are obviously good entries. Good entries. Look, buys there, and obviously buys here. A little bit move up, we'll come back down and buy again there. So yeah, I mean, I'm an advocate of not entering, of working positions, not entering the whole of a position at the same time, not entering the whole of it, and not exiting the whole of a position at the same time. So this is great for that, because you take part off, you add part back on, you take part off, add part back on, add a bit more on, add a bit more on, and then potentially take part off. So I do really like this indicator. I can see it working nice in Tezos here. Obviously some sells there, sell there, move down, some buys, move up, sell, some sells, some buys, some moves up, some sells on the way up. So you guys can see how it works. Some sells, and then big buys. Not big buys, some regular buys. I don't know why I said some big buys. But yeah, you can see it again here, buys, sells here, and buys, and it's just a good way of working a position. And yeah, and there is a little bit more detail I want to go into on this indicator, because there's a few hedge funds that I basically speak to the guys, the traders there, because I just know them from back in the day, and they tell me how they trade this sort of risk range, where they have a risk range based on the price and the volatility, and the risk range will change. Obviously it increases with the range will increase with increases in volatility, and obviously it'll move with the price. And then what they look to do is buy things they want to buy at the low end of the ranges, and then take profits at the high end of the ranges, which is basically what I do on this indicator. Which is basically what this indicator is. So I can tell you now, proper hedge funds are using indicators like this that basically have the price and the volatility, and they will trade around this, which they call a risk range. And so as you see the price come down towards the bottom of the risk range, the bottom of this, obviously this channel, it then becomes a buy. And then what they do is they keep note of the top of the channel, because the top of the channel indicates the top of the risk range and the bottom of the risk range. And often you struggle to get to the bottom of the risk range because you'd have to have a big move in a day, like here for example, whilst you're also quite close to it, because quite clearly these ranges they're dynamic, they're moving targets basically. So you often don't. So basically that's what they do. They'll average in. So they'll have, let's say, an asset they want to buy. So let's pick something that's trending up. Yeah, so potentially this is trending up. Tezos. So they have this bottom area of the risk range, and so what they'll do is they'll just look to buy once we get towards the lower end. I mean, it is literally that simple, guys. And then what they also have is they have a wider time frame risk range, which is what I've got here, which is incidentally a very similar setup to obviously what I've got here, funnily enough. Would you believe it? But yeah, so what they'll have is they'll be watching the actual direction of the market based on these wider risk ranges, and the direction, the slope of them. So you can kind of see we're still in an upward bias, so they still would be buying even whilst this is the actual like the low end of the range is moving down. They'll still be buying, and then obviously they get the move up. But don't forget, they do have a view on these assets. They do have a view on what they are trading, to either the upside or the downside. So much the same way I tell you guys that we're in an inflationary environment. So basically you want to buy silver, you want to buy gold, you want to buy commodities, you want to buy oil, you want to buy things, soft commodities, you want to buy basically foods, wheat and soybeans. Also that you want to buy utilities because they're sort of bond proxies. Obviously bonds are going down, you want to buy bonds, so you want to actually buy the bonds, so the yield is going down. Bitcoin also class as the commodity you want to buy. So basically they have a regime, and I tell you all this information as well because I get this information too. from them. So and I get, yeah, so that's what they'll look at. And then individual stocks, individual sectors they're looking at, there are stocks that they like, that they will buy at the low end of the risk range and then take some profits at the high end of the risk range. And it is basically how professionals trade. One other aspect of basically how professionals trade and why they trade this way is because it's because of liquidity concerns as well. Like, they don't want to be getting all in and all out of positions with big clip sizes at certain points in the market. They do always want to be averaging in, averaging in, averaging out, averaging out, averaging in, averaging out. So this is literally a setup like this, maybe a bit more sophisticated, maybe not even more, literally maybe not more sophisticated at all. You've still got a trader guy there like me who's making decisions. It's maybe more sophisticated in the way that they've got actual other macro analysts crunching lots of macro data, literally hundreds of data points a day to fit into a model that will model basically our movements in the regime of inflation expectations and growth expectations, and then they will then project that into basically models based on those parameters in the past. I feel like I'm going in a lot of detail here, but this is basically how they work, and they'll project what state they think the market is going to be in going forwards. And these are like before the curve events. They're basically operating off a second derivative. Basically, they're looking at the rate of change. It's always about the rate of change. It's always about the rate of change in these macro assets to then obviously dictate what the trends are going to be going forwards before you move into that trend. So they'll often be either early or on time with their actual regime change calls, based on the fact that they are looking at rate of change. Rate of change is basically the most important thing in everything, in everything, in life, in everything. It's all about the rate of change. So, right, I've gone into a lot of detail. This indicator is basically great. That's all I'm saying. That's what I am saying. Because it is based on a risk range. It's based on basically the volatility of the price dictates the width of the risk range, and then you want to buy at the bottom and sell at the top. But obviously what you want to be doing is you want to basically have a directional bias of that asset, and you obviously want to be correct on that directional bias, which obviously that's why I've just gone into all that other detail. But then when you have a directional bias, then all you do is you'll buy to go long the asset, and then take partial profits as it goes up, and then buy to stay long. You'll stay net long, obviously based on the fact you think the asset is going up. But conversely, if you are wrong on this asset and you think it's going down, basically you're selling, so you could be selling, and then taking some profits, selling, taking some profits, selling some more, and taking some profits, selling some more, taking profits. Even if the price goes against you, you're not making as big losses as you would be. So consider that. It's how professionals trade, basically. So that's it really. What is great though is that you can set this up with these crypto coins anyway, with these crypto assets, and you can set it up with 3 commas through the exchanges, and you can automate this. Fantastic. It is amazing. I am obviously just been playing around with setting it up with these bags and these assets, and obviously it's going well. You can see all these trades have all basically been in profit. I don't think any of them has really gone much offside, to be honest. And that is testament to the indicator. So free indicator, guys, you should definitely have this. I would suggest that this is what you should be using to trade, really. Let me show you it on Bitcoin. Let me show you on Bitcoin just to give you an idea. Let's show you guys on Bitcoin. Here we go, Bitcoin, and we'll go over to a 4-hour chart. So what has it told us to do with Bitcoin on this 4-hour chart? So it had a buy there. We'll go all the way back to here. Buy there and a sell there. So nice move up, move down. Then it got us to buy there, which obviously wasn't a great buy, but then it told us to buy more down here. And then a sell there, then a buy some more, then a sell, a buy, sell, buy down here, sell up there, buy down there, sell up there, sell up that high, sell at that high, buys at these lows, sell at that high, buys at these lows, sell at those highs, buy at those lows, buy at those lows, sell at those highs. And this is obviously where our volatility dropped off. And like I explained to you, basically this risk range is dictated by the volatility. So it's like it is a Bollinger Band basically. It is a dynamic Bollinger Band based off volatility, rather than literally just a textbook variation away from the price. You can just see how great this has worked the whole way through. If you were like buying X say 25% or 10% or whatever of your position and taking out and buying and taking out, I mean, you can see how it got you some sells, all these highs and all these lows. I mean, what do you think is happening if you're going to be selling there, buying there, selling there, buying here, selling there, buying there, selling? What do you think is going to happen? You're just going to make money, aren't you? That's it. I mean, and there you go. And that's why we use this indicator. And this is on a 4 hour. This is obviously a larger time frame of 4 hour. We are using it on the 1 hour for these altcoins. I mean, let me just zoom in. Let's zoom in and look at it on the 1 hour. So you can see on the 1 hour, it's still, obviously it's a fractal in nature. I mean, sell here, buys down there, buys down there. Notice how obviously the buys are below the sells. Sell, buy, sell, buy, sell, sell, buy, sell, buy, sell, buy, sell, buy, then sell, buy, sell, buy. It's poetry in motion, isn't it, guys? So right, that's it. Let me end this video now. So yeah, our Bitcoin account, our BitMEX MXC trading. Again, we're getting saved by MXC, but I've been smashing some insane trades on MXC anyway. So yeah. I mean, MXC is carrying us at the moment, but MXC has the coins that I like. MXC has a lot of the DeFi coins, the coins that are sort of involved in the Polkadot infrastructure ecosystem that I'm looking at. So obviously Kusama, we're out of Kusama because it had a spike up, but yeah, Kusama, Polkadot, PCX, Edgeware, ChainX, Edgeware, these are the coins that I am most bullish off. Sora as well. XOR was one we made an absolute fortune on, and again, it's part of the Polkadot ecosystem. It's going to basically power their Polka Swap decentralized exchange. So there we go, guys. So yeah, that's it. A little bit of a long video, but we've covered a lot there. 3 comments working well. The indicator, I've explained the indicator to you. Binance altcoins getting hammered, but we have got this saving us, which could have it saving us more. MXC, Polkadot DeFi ecosystem, whatchamacallit, ecosystem, altcoins saving the day. And imagine I would be trading these coins in the same percentage wise based on the account size. Imagine if we didn't have basically 75% of the account initially in here, and we had it in here, or even if it was 50-50, we would be up an awful lot more than the near the 10% in about 10 days that we're up already. So thanks for listening, guys. Remember, this is not financial advice. Oh yeah, just let me tell you as well, the amount that we're up already on top of this is on top of Bitcoin going up as well. And you guys know, obviously, when Bitcoin can go up, altcoins can get hammered. So we're talking Bitcoin value, we're up with Bitcoin up nicely as well. So yeah, it's going well, guys. So thanks for listening. Remember, not a financial advice, not a financial advisor, and I'll speak to you guys soon.